Welcome to Flood Insurance 101. Like earthquake insurance, flood coverage is one of the most misunderstood and most consequential gaps in a homeowner's protection. Standard homeowners insurance does not cover flood damage ever. And in California, the flood risk is more widespread than most clients realize. Rivers, storm drains, coastal surge, atmospheric rivers, and post-wildfire mud flow all create serious exposure, often in areas people never expect. Today, we'll cover how water damage is categorized, what flood insurance actually covers, the NHIP versus private market options, key terms, rating factors, discounts, and the common myths your trainer will go through live with you. Let's get started. Before we talk about flood insurance specifically, agents need to understand how water damage is categorized, because the category determines which policy pays. Category 1 is sudden and accidental water damage. A pipe bursts, an appliance malfunctions, a bathtub overflows accidentally. This is covered under a standard homeowner's policy. Category 2 is water or sewage backup. A sewer line backs up into the home. A drain overflows. A sump pump fails. This is also covered under homeowners, but typically requires a specific endorsement. This is why we always recommend the water backup endorsement on every homeowner's quote. Category 3 is flood damage, specifically rising groundwater that originates outside the home. A river overflows its banks. A storm drain surges. Coastal waters rise. Groundwater rises after heavy rain or snowmelt. This is never covered under a standard homeowner's policy ever. It requires a separate flood insurance policy. Teaching clients this distinction early prevents the most common and most painful coverage gap conversation, the one that happens after a loss. Let's pause here and hammer this point home before we continue. Now that we understand what flood damage is, let's talk about what flood insurance does. Flood insurance covers the structure of the home and the client's belongings when flood damage, rising groundwater from outside the home, occurs. It does not cover everything water-related. It covers specifically the category we just talked about. In California, the risk is broader than most people think. Yes, rivers and coasts are obvious, but atmospheric rivers have caused catastrophic flooding in areas that haven't flooded in decades. And post-wildfire mudflow is a serious and growing risk. Once vegetation is burned away, hillsides can't absorb rain, and the runoff becomes a flood event. Mudflow is covered under flood insurance. Lenders require flood insurance when a property is in a high-risk FEMA flood zone, Zone A or Zone V, but lenders can also require it in moderate risk zones at their discretion, and we recommend it in all but the lowest risk situations. The two options are NFIP, the National Flood Insurance Program, backed by the federal government, and private flood carriers. Both have distinct trade-offs. You need to know both. A flood policy covers two things: the building and the contents, and these two coverages must be purchased separately on an NFIP policy. A client can buy one without the other. Many do, and most regret it. Building property coverage pays to repair or rebuild the home structure. Under NFIP, the maximum for residential is $250,000. For homes with higher rebuild costs, common in California, private flood policies offer higher limits. NFIP does pay replacement cost value on the primary residence building, which is a positive. Personal property coverage, also called contents coverage, pays to replace the belongings inside the home. The NFIP cap is $100,000 and it pays ACV, not replacement cost. This is important to explain to clients who have high value items. Private carriers may offer replacement cost on contents. The critical point here: contents coverage is optional and purchased separately. Agents should always recommend it. Clients who skip it often discover that losing the structure and losing everything inside are two completely different financial hits. Two other coverages, loss of use and other structures, are not available under NFIP at all. If a client wants coverage for temporary housing after a flood loss, private flood is the only path. Let's take a second to recap with your trainer. These are the terms you will use in every flood insurance conversation. A few to emphasize: flood zones are critical. Zone A and AE are high risk. Lenders require flood insurance here. Zone V and VE are coastal high risk. Zone X is moderate to low risk. Lenders often don't require it here, but that doesn't mean clients shouldn't have it. More on that in the myth session. The deductible on a flood policy is a flat dollar amount, not a percentage like earthquake. And it is separate for building and contents. A client can have a $2,000 building deductible and a $1,000 contents deductible. The 30-day waiting period on NFIP is something clients need to know before they need it. If a storm is coming and a client calls to buy flood insurance, it's too late. Always bring up flood insurance proactively, not reactively. Mudflow versus landslide is an important distinction in California. Mudflow, A flowing river of liquid mud caused by flooding is covered under flood insurance. Landslide, a mass movement of rock and earth, is not. Know the difference, because clients in fire-damaged areas will ask. Risk Rating 2.0 changed how NFIP prices policies in 2021. It now uses individual property characteristics rather than just flood zone, which means some properties saw premium increases while others saw decreases. Flood premiums vary widely, and understanding both the rating factors and the levers clients can pull to reduce premium is important. On the discount side, elevating a home above its base flood elevation is the most powerful premium reducer, but it's a major construction project, not something most clients will do retroactively. For new builds or clients doing major renovations, it's worth mentioning. The elevation certificate is more actionable. Always ask clients if they have one. If their home was built above the BFE, an elevation certificate proves it to the insurer and can result in a meaningful premium reduction on an NFIP policy. High deductibles and the private market are the most practical levers for most clients. Private carriers are often significantly cheaper than NFIP in Zone X and lower risk areas. Always run the comparison. On rating factors, the two most important are flood zone and elevation relative to BFE. These drive the largest premium differences. A home in Zone AE at or below BFE will pay significantly more than the same home 2 feet above BFE. Basements and crawl spaces increase risk because they are the lowest point, the first to flood, and the most expensive to remediate. Risk Rating 2.0 means NFIP now prices at the individual property level. Two homes on the same street in the same flood zone can have different premiums. All 7 myths are marked for your live whiteboard session. Here's context on each. Myth 1, homeowners covers flood. The most important and most common misconception. Standard homeowners policies universally exclude flood damage. Category 3, water damage, period. Myth 2, don't live near water. Flooding regularly occurs in areas with no nearby river or coast. Storm drain overflow, ground saturation, atmospheric rivers, and post-wildfire mudflow are all flooding events that happen in suburban and inland areas. Myth 3, only high-risk zones need it. More than 20% of NFIP claims come from properties outside high-risk flood zones. Moderate risk does not mean no risk, it means lower risk. For many CA clients, the premium in a moderate risk zone is affordable enough that carrying it is an easy recommendation. Myth 4, FEMA will cover it. FEMA disaster assistance after a declared disaster is primarily low-interest loans. Homeowners without flood insurance are borrowing to rebuild. The average FEMA household assistance grant is typically under $10,000. Far less than most flood losses. Myth 5 covers all water damage. This is exactly why we started with the 3-category framework. Burst pipes are Category 1, homeowners. Sewer backup is Category 2, homeowners endorsement. Rising groundwater is Category 3, flood only. Myth 6, no point because of waiting period. The waiting period is a reason to buy flood insurance early, not a reason not to buy it. The answer to the 30-day wait is to have the conversation before a weather event is forecast. Private carriers often have shorter or no waiting periods. Myth 7, renters don't need it. Renters can purchase contents-only flood coverage. Their belongings are just as exposed to flood damage as a homeowner's, and their landlord's policy covers only the structure. Your trainer will give you more context on these myths now. Your trainer will use this slide as the anchor for a real scenario whiteboard discussion. Here is the full context on each point. California atmospheric rivers and post-wildfire mudflow, recent events, including flooding in areas that hadn't flooded in generations, have demonstrated that flood risk in California is not confined to obvious flood zones. After wildfires, hillside vegetation that normally absorbs rain is gone, and the next rain event becomes a mudflow event. This exposure is real, it is growing, and it is something every CA homeowner conversation should include. FEMA is loans, not grants. Reinforce this every time. The average federal household assistance grant after a declared disaster is a fraction of a typical flood loss. The rest comes as a low-interest loan that the homeowner repays. NFIP caps at $250K building. Many California homes have replacement costs well above $250,000. For these clients, NFIP alone is not sufficient. They need a private flood policy with higher limits or an excess flood policy on top of NFIP. Contents is optional on NFIP. This is one of the most painful conversations agents have with clients after a loss. Always recommend contents coverage, always. No loss of use under NFIP. Displacement after a significant flood can last months. Without temporary housing coverage, clients pay out of pocket for hotel and rental costs on top of the deductible. Private flood policies that include loss of use are worth the conversation. These are the recommended benchmarks your trainer will walk through live. Building coverage, set at full replacement cost up to the $250,000 NFIP maximum. For any California home with a rebuild cost above that, which is common, have the private flood or excess flood conversation. Contents coverage always recommended. Set it based on a realistic estimate of what the client owns. Never let a client walk away without contents coverage without explicitly declining it after being informed of what it covers. Loss of use, not available under NFIP at all. If a client asks about temporary housing coverage, private flood is the answer. This is a meaningful differentiator when presenting private flood options. Deductible. Unlike earthquake, flood deductibles are flat dollar amounts, and they are separate for building and contents. Make sure clients understand both deductibles before they choose. Waiting period. The 30-day NFIP waiting period is real. Exceptions exist for new purchase closings and lender-required coverage. Know these cold. Private carriers often offer much shorter or no waiting periods. Post-wildfire risk. This is a California-specific talking point that no other state has as urgently. If a client is in or near a burn area from the past few years, their mud flow risk is significantly elevated for 3 to 5 years post-fire. Flag this proactively in every homeowner's review in those areas. Let's break these coverages down on the whiteboard with real scenarios and the recommendations for each. This activity applies what you've learned to real client accounts. Question 1. Does each client have flood insurance, and is it NFIP or private? This establishes the baseline. For clients without it, this becomes a sales conversation. For those who have it, note the carrier type and whether the coverage structure is appropriate. Question 2. What flood zone is each property in? Agents should be able to look this up on FEMA's Flood Map Service Center. Practice doing this lookup. Knowing a client's flood zone before they do is a powerful conversation opener. Question 3. Contents coverage check. This is the most common gap. A client with building-only coverage has no protection for their furniture, electronics, clothing, or appliances in a flood event. Question 4. This is the most important question. It tests the full consultative conversation. In Zone X, the client isn't required to carry flood insurance. The agent's job is to make the case anyway. The answer should reference: the cost of flood insurance in a moderate risk zone is often low. Zone X properties do flood. FEMA assistance is loans, not grants. And the 30-day waiting period means now is always the right time. Debrief as a group. Have agents walk through their reasoning on question 4 specifically. Great work getting through Flood Insurance 101. You now know how water damage is categorized, what flood insurance covers and what it doesn't, the difference between NFIP and private flood, the key terms and rating factors, how to advise on limits, and the myths you will need to address in every homeowner's conversation. Remember the key takeaways. Contents coverage must be purchased separately. Always recommended. Loss of use is only available through private flood. The 30-day waiting period means the time to buy is now, not when a storm is forecast. And in California, post-wildfire mudflow exposure is real and growing. After the activity, bring any questions to your end-of-day manager check-in. Up next is Earthquake Insurance 101, the other major exclusion that every California homeowner needs to hear about. Flood and earthquake together represent the two biggest uninsured risks for your clients, and you now have the foundation for both conversations.